Let's look at how to invest in residential real estate. First, we'll look at timing in this video. Then in following videos, we'll look at affordability and suitability for investing in real estate, setting up a strategy, whether it's cash flow or capital growth, and then we'll look at a top-down asset selection process called the MAP process. First, we'll start with the market to find the right city to invest in. Then we'll look at area to find the right suburb or region within that market. And then we'll find the right property. We'll find the right location, the right build, and the right dwelling type. Then we'll look at finding the next property and repeating the process so you can build a multi-asset property portfolio. On the right, you can see our property clock here, with each city in its own stage of the property cycle. Basically, what we're looking to do here is achieve short-term, medium-term, and long-term capital growth potential in our next investment. So we want to be looking at investing in a city that is at the start of recovery or rising market sections of the property clock. And we want to be avoiding anything between the peak of market and the bottom of market. This is all declining markets. There's no point investing money in a market if you're going to be losing money. We want to avoid buying at the bottom of the market because prices can stall at the bottom of the market for extended periods of time. What we want to be doing is once again maximizing short-term, medium-term, and long-term growth potential. So we'll be investing at the start of recovery or the rising market sections to ride that growth as the market approaches its peak. So we want to make sure that we're getting in at the right time, and we want to see evidence of positive price growth. We want to buy at the beginning of the growth cycle. We want to avoid regions with negative price growth in general. It could continue for a very long period of time, as has been the experience with Perth and regional Western Australia over the last roughly decade. We've got to be wary of development activity as well. So developments can take many years to complete. And by developments, I'm referring to large-scale apartment buildings. Successful developers will time their entry into the market. They will buy at or near the bottom of the market, and then they'll develop and building during the rising market, and then they'll be aiming to sell at the peak of market for maximum profit. And if a lot of developers are offloading all of their new stock to the market at the same time, there can be an oversupply, which will lead to falling prices, as has been the experience in Brisbane's inner city apartment market over the past decade. As we can see on the chart here, units have performed much worse in Brisbane than houses have performed.